Hey everybody! As you can see, I am on the road and had a bit of a rude awakening this morning, and I hope everybody can actually hear me. Let me know if you can't, and if I'm loud enough. Fingers crossed, everything is good. And hello everybody! Yes, this is a crazy time. Had a very early wake-up call this morning, and as usual, more FUD happens. But what I'm going to try and do today is put together all of the elements of the FUD as to exactly what's going on and to why and who could be behind it. So what's up, everybody? Let's go. We got people in Colorado. I hope it's not too sunny or snowy in Colorado. We got 1,000 people watching, which is good considering I just began. All right, let's jump in. First of all, none of this is financial advice. I will be covering a bunch of interesting stuff today. But first of all, the FUD. And then I'm going to turn it into a bit of a why Bitcoin video as well. So let's jump into the first thing that happened at 4 a.m. There's a company called Matrixport. There's a Chinese millionaire that runs it, maybe a billionaire at this stage. They build Bitcoin miners, and literally yesterday, in one moment, they said Bitcoin pumps to 50K in January based on ETF approval. And hours later, they print this. The SEC will reject Bitcoin spot ETFs again. And it just shows you how fickle the world is, which is actually a great opportunity for us. Because when people are easily led, easily fooled, it gives us buying opportunities. And that's what's very, very important. So literally, this so-called analyst of Matrixport is actually the CEO of a Bitcoin mining company. I don't know much about him, but I've heard about Matrixport a few times before. And again, it's like putting Jim Cramer on TV. Doesn't make any sense. I wouldn't call him an analyst. But what is interesting is this happened. We had a $4,000 Bitcoin drop in 2 hours, which is pretty stunning. Got to move myself around so you can see exactly what's going on here. A beautiful, beautiful dip. And you know somebody is buying. But why this happens is what we'll get into. It's not that people get nervous from the article, but if you look at the way the chart works here, it's a staggered drip. If you imagine each one of these little here to here, here to here, here to here, tick, 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 what these are is cascading liquidations, absolutely smashing leveraged investors that were totally sure that Bitcoin was going to go to the moon, and of course it didn't. So, not yet. So I see these, and I love these as a buy the dip opportunity. And in full disclosure, I was actually hedged MicroStrategy because it looked really, really toppy at 720. So that was just a perfect opportunity for me to cover my hedge. I was gonna win that trade anyway, but it meant I could just be more secure and get out of it fast at a very tidy profit. Anyhow, let's talk about the actual liquidations. 1 hour. $500 million. And by the way, this does not even include the Deribit investors. They didn't have their booking yet, and I guarantee you there was another 100 million plus in Deribit that were wiped here. But if you look at OKX, $250 million, Binance 115 million, Huobi 75, CoinEx, etc., I guarantee you when Deribit does report, it'll be a lot higher. And these are people that are leveraged long investors who don't know how it works. And leverage is good. I love leverage, but you got to be able to have what I call the mattress to be able to absorb a violent fluctuation. That's what happens in crypto. Okay? They do this on purpose to steal your money. It's like a mugging down a dark alley at night. And the sooner people understand that, the better. But let's dig into some more interesting information. This is another view, and I just made up this little quotation way back in 2020. Is basically when everyone goes leveraged long, they get preyed upon. It's kind of like one of my best poems, and I'm not a poet, obviously, but that's what happens, everybody. The GRQ, the Get Rich Quick. I made a video on that years ago. I think it was on April 1st as a joke. It doesn't work. All right, you need to be in this game with a plan, like going to sea in a boat, and you need to be able to weather any storm, or you will get wrecked or shipwrecked, and that's just how it works. There was a great little just to show you how the whole funding and the leverage and what the hunters see when they prey on the leveraged retail investor. And this is from Will Clemente. And you can see before the amount of leverage, the amount of premium on going long was through the roof. And this had been, obvious for so many days. It's only a matter of time before somebody goes in and just mugs them all as they are out there. And as Will Clemente says, a very nice rinsing across the board, multi-billion-dollar open interest drop across the board, funding rates back to room temperature. The funding rates were like 25 basis points or more, or 2.5% in many cases across many of these exchanges. And that is just not sustainable, everybody. And it got wiped. Notice, though, however, Binance was not in that way, which means maybe Binance knew something, because they weren't maybe quite as extreme. And whether it's normal, I'm not sure exactly. But anyway, that's interesting that Binance is a different color to the rest, unless they were super leveraged, which I don't think they were. Now, this all comes back to the fear that the spot ETF is not going to happen. And again, this is about FUD. I have never read so much FUD against this, from buy the rumor, sell the news, to, the Bitcoin maxis think the spot ETF is bad, to whatever else. Literally, just listen to the smart people. Listen to people like Saylor, who understands macro, he understands money, and he understands Bitcoin. He will set you right. But be careful, because there's so many people send to be stuff and say, well, this person said this, and this person said this, and this person did this. They're not qualified to give an opinion. So be careful who you listen to. And sorry to sound a little bit stern today, but literally, the FUD is beginning to get to a level that's just frustrating me. Now, MetaLawMan, he is one of those people that you can listen to and you can trust. Shout out to Sanjay for sharing this with me. And he popped up in my feed anyway. But MetaLawMan, he said, if the SEC were to deny all spot ETFs, the applicants would immediately sue, and the DC Court of Appeals could again rule that the SEC was arbitrary and capricious. The SEC have no grounds to stand on to deny the Bitcoin spot ETF. Therefore, it has to be approved. And many expect all the approvals to hit between January 8th and January 10th. We're not sure exactly when, but that's kind of where it is. Now, one other thing that's very important as well. This just happened from Whale Watcher or Guru Watcher. I can't remember which one it was. But again, it popped up in my feed. Just in the SEC schedules meetings today, January 3rd, 2024, with the New York Stock Exchange, NASDAQ, and the CBOE, that's the Chicago Board of Exchange, to finalize comments on spot Bitcoin ETFs, Fox Business reports. Okay? This is as real as it gets, and it shows you they're still working on getting this. If they were going to reject it, they would not be having this meeting, ladies and gentlemen. In addition, another good news, 10 million. This is another piece of kind of mini FUD, and I'm tackling all the FUD first, and then we get into the interesting macro stuff. But here you see Blackrock delays $10 million Bitcoin purchase. Okay, when you hear that, it's like, they're not going to seed their fund. But they were going to rock out and buy $10 million worth of Bitcoin. Bitcoin's now above 43,000. It fell down to 40,000 and change. It fell down to 40,200, 40,400, I think. It's already rebounded $3,000. Maybe, speculating here, but I've got to guess, maybe they are bought today. Anyway, they are moving their $10 million Bitcoin purchase from the 3rd of January, which is today, to the 5th, which is Friday. And I think they're already stacking. And this is proof of that as well. BlackRock reschedules seeding of its Bitcoin ETF to January 5th. All right, verified there. Now, let's get into some more good stuff. First of all, this is a little bit of kind of history. This is a quote by a fellow called Carl Jung. He was a Swiss psychiatrist and psychoanalyst, and he suggests that events may seem like mere coincidences, but they're actually part of a larger pattern of meaningful collections and connections called synchronicity. Okay, that's what's happening here, I believe. Jung believed that the synchronistic events held, around the universe were not random occurrences. It's all part of a plan. And the idea is that the universe is interconnected, maybe in mysterious ways, or maybe because it's a plan. And the quicker you all as investors understand that, the better you will be. Okay, nothing is a coincidence, not at all. Next, this is another bit of FUD and concern that we can't quite fathom yet, but Grayscale are very worried they're going to be left out in the dark. We know that Grayscale had to sweep 2 executives from their team, including Barry Silbert. Obviously, the SEC probably has evidence that they did some shady things in the past and wanted them out. They want to clear the decks of all the nefarious players, the CZs and the Barry Silberts and the FTXs and all that type of stuff, and make it clean for the Fidelities and the Blackrocks and all these other big funds to come in and play. But Michael Sonnenschein is concerned, all right, that he wants to make sure the regulators approve all spot ETFs at the same time. He advocates for this. Now, he believes if they do not get approval at the same time, the first to market gets most, and that's probably BlackRock. So it would not surprise me if BlackRock were able to get the approval first to come to market. But you can see Michael Sonnenschein is visually concerned that he'll be left out in the dark. And remember, GBTC, I covered it, I think, in Octa yesterday. The discount's gone up to nearly 9% again. It was at 6%. A lot of people like Kathy Wood sold. Now people are beginning to flip their GBTC into other assets like MicroStrategy on the dip today and Bitcoin miners as a result of that, which is probably quite prudent. Anyway, either way, who cares about those guys? Now, going back to Carl Jung and coincidence, guess what? You can't make this stuff up. 15 years ago today, Bitcoin created the Genesis block. Right? This is massive. And for those who don't know, that was the very first block printed by the Bitcoin system, January 3rd, 2009. And the real key thing is you can kind of read that message in the code there. And the Times, 3rd of January 2009, Chancellor on brink of a second bailout for banks. This was a headline from the Times in the United Kingdom. So shout out to everybody in the UK over there. You guys are part of history. And this is big. Again, no such thing as coincidences. How come this FUD happened on this day? I'm not sure. And of course, me having fun with Twitter. I said, hey, pre-birthday celebration, what did I say here? Happy birthday, pre-sale, $4,000 off Bitcoin. Yay. And by the way, the initial release, the actual first release of it actually happened on the 9th of January. And I still believe there's a 95% chance the spot ETF will be approved between the 8th and the 10th of January. Imagine if it happened on the 9th. That is the initial release 0.1.0 of the Bitcoin protocol. Again, coincidence? I think not. We'll definitely find out in 5 days? 6 days? Either way, it'll be very interesting. Now, in other crazy Bitcoin news, you can't make this stuff up, everybody. And this sometimes this type of chart confuses people from Glassnode, but millionaires are rushing in. There are now 100,000 $1 million wallets on the Bitcoin network. 100,000 wallets have $1 million plus. Now, don't confuse this with kind of my studies on whole coiners and everything else. Many of these $1 million plus wallets are owned by one person, and they have many of them. Okay, they spread it around. That's what you do. You don't have all your eggs in one basket. We all know that if you listen to this channel. So, but having that now, that amount of wealth across that amount of wallets, 100,000, is very unique for this stage of the bull run as well. So I expect this to go a lot higher this time around, which is also very exciting. Now, let's get back to why we Bitcoin, as I say. This is an S-curve from Charlie Bilello, and it's extremely impressive. Not only has debt, and remember, macro, crypto, it's all completely interrelated, and this is why I started this channel. This is why I talk about Bitcoin. We now have, in the United States and many other countries around the world, massive amounts of debt, but the US alone has 34 trillion. Just 12 weeks after we hit 33 trillion, okay? And just 2 years after we hit 30 trillion. And just 4 years after we hit 24 trillion. This is in the S curve. You hear me talk about S curves with AI and technology and all that type of stuff. But now it's happening with debt as well. So we got literally many colliding S curves happening at the same time. And a quick visual of what 34 trillion looks like. Literally, your mind can't even fathom. Again, me having fun on Twitter. U.S. government just hit 34 trillion in debt. Next stop, 35 trillion. I estimate they'll be at 35 trillion by April at the latest. April 2024. We're talking 12 to 14 weeks away. Now, remember, the more debt there is, the more debasement there is of your fiat, therefore Bitcoin. And I'll dig into some more numbers because people always get confused by this, but it's worth paying some time and attention to, because literally I keep getting urged by people saying, hey, I have loved ones, I've got family members, I've got friends, I've got a network, they don't believe in Bitcoin, they believe it's a scam. Just show them this, or show them this, or talk about how we've gone just within 4 years from 24 trillion of debt to 34 trillion. That's 10 trillion more in 12,000 days. Did I get that right? Yeah, 1,200 days, sorry. 1,200 days, not 12,000 days. Sounds like a Tool album. Anyway, show them this graphic. Move your, hang on a sec. Let me see. I gotta move something. Make sure people are telling me I've got something in the way. And move your bottom opposite the logo. Okay, good idea. I'm getting orders. Thank you so much. Now, what I also sent is kind of the debt. Not only is there a huge amount of debt, but there's also a ton of interest on that debt because the rates are so high. But I put this little chart together yesterday, and many expect, and the reason we care about interest rates, by the way, for those who don't understand, is when they get cut, it means risk on, which means prices of assets go up. Okay, think of it as an inverse relationship. The higher the rate, the more compression on the asset. The lower the rate, the more the asset explodes. Okay, this is why we care about this. And you've got all the different institutions and their expectations of where interest rates are going to go. Wells Fargo expect 225 basis point cut in 2024, and the month they expect most of the action to happen is June, etc. You can see the highest is 275. The median of all of these is about 129 basis points of cuts. That's 5 cuts, and many people are now saying there could be a cut of 50 basis points as soon as March of this year. And again, if we're in position, what I expect probably to happen is a dip in Feb, early March, then the cut will happen, and then things will go right to the moon. So be hedged and be prepared with cash for those fun times ahead. Now, back to debt. U.S. interest on debt also broke a new record, heading to 1.1 trillion. It just blasted through 1.05 trillion. I was saying it's going to hit $1 trillion last year. It did, and now we're heading real fast because the debt is growing real fast. Okay, it's all completely related. And when you look at the US budget, and again, this is the same for Australia, same for United Kingdom, same for Europe, same for other parts of the world. These are the main spending areas of the US budget. Interest expense is heading to 1.1 trillion. Defense budget is 0.85 trillion. Medicare, 0.85. Health care, 0.9. And Social Security, 1.35. That's the kind of pensions and welfare and all that type of stuff. The interest that they spend alone is about to surpass Social Security. And forget the rest. That means deficits. That means debt spiral. That means money printing to infinity. That means your dollar is going to get a lot weaker, ladies and gentlemen. Sorry to spend this bad news. And for those who don't believe, again, Charlie below, starring here, shows you how the S&P 500 went up 800%. And your buying power fell 53% in fiat terms. You don't want to be holding cash, ladies and gentlemen. You want to be in hard assets. So I decided to put yet another chart together just to portray this, because some people believe that gold will save them. No, it will not. So I put together a history of the returns of these assets over time. I hope I can... Let me see, I'm kind of blocking part of it. I'm going to move myself a little bit to the left here so you can see all the numbers. Take a screenshot if you want. But this is the ROI on an annual basis going back over time. So if you go back to 2010, you're assuming 14 years of returns. That'll get you to that 66.1 million% or something crazy like that. Whereas your gold ROI is crummy. and it gets worse and worse. But what I did was you show the ROI for Bitcoin in any given year, ROI for gold, and the ROI for the S&P 500. What's most important to focus on for friends of yours who may be gold bugs, subtract the ROI from the S&P 500 from gold ROI and you get a return. So basically, if you were not in the stock market but you were in gold over the last 14 years, you lost a truckload of money. Okay, that's the opportunity cost. So I want people to really understand how important that is as well. If you're in Bitcoin, you are delightfully hedged. Yes, it's volatile. That's why I say wear your seatbelts all the time. This is a visual of what I'm talking about here. I ran out of time, so the chart got a little bit messed up. But the point is, you want to be in things like, you don't want to be in the red, which is the gold ROI. S&P is okay, but the gold loss to the S&P is horrific, and the Bitcoin ROI is outstanding. Now, a couple more little things before I get to the conclusion. Actually, one last chart. Despite all the fear and people saying, oh, it's going to tank further with Bitcoin at 43,000, it did hit 40,100. That is what's called a buying opportunity. That's why I'm up at 4 a.m. If you look at the chart and we zoom out a little bit and see where we are right now, we're still heavily trending upwards, okay? This thing is going to 69K. I don't know when, but it's probably going to happen pretty soon. And you guys need to be along for the ride. This is an opportunity. So very quick conclusion. I'll let you all go. First of all, I am still, and many other people out there are believing that there's still 95% chance for a spot ETF that's going to come before the 10th of this month. And it'll bring billions into Bitcoin, which is going to inflate the price. This is why if you can front run, for example, as I'd covered earlier, you've got, hold on a second, let me just make sure. This is too important to miss. I got to hammer this home. Blackrock is buying $10 million worth of Bitcoin on Friday. Okay, you want to be in there before those guys, if you're not already fully packed, which you probably are if you're in this channel. Anyway, the billions will increase price significantly. Literally, this thing is so scarce. Long-term holders are increasing. Look at the $1 million wallets are increasing like crazy. Fiat is total trash. Debt and interest are S-curving. Debt and interest are S-curving. And this is why we have Bitcoin. And stay the course. Don't believe the FUD. And this, I believe, is a great buying opportunity. So everybody, thank you so much for coming. Thank you to everybody on Patreon. KPM means knowledge per minute. That's what I guarantee on this channel. You try to teach you something new every single minute that you're on this channel. So a big thank you to everybody here. Thank you to the mods in the chat. And, you know, this is just not a coincidence. This is most probably a plan. Watch what the big guys do, not what they say, and do not believe what's in the headlines at all. Thank you, everybody. See you later. Bye-bye.